Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up in their names, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back, knowing that it's...
Hey, welcome back to the channel. So I just broke this news not too long ago, and the Fed is actually expecting 3 rate cuts in 2024. So the last video that I did, when I was talking about real estate agents having to push through this being the hardest time of the year for them, listen, it might get a lot easier, especially with all the volume that's starting to hit the market in terms of housing, especially because the Fed doesn't want to really carry such heavy debts, and especially with these high rates that these banks are paying right now. Oh my goodness. When I tell you, I really don't want to spend any money, because I mean, getting 5% on your money just sitting in the bank, it makes sense to just keep it there. It just makes sense to not spend a dollar. I mean, but as these interest rates start to drop, cars will be less expensive. You can now go outside and afford to finance a vehicle. You can now go outside and afford to finance a home. You can now leave the house. You can start peeking through and say, you know what? I can do this thing. I can live this thing called life, but it will require some debt. And so the Fed is expecting 3 rate cuts this year, still. And you know, do I believe that they'll hit their 2% mark? I actually do not believe that they're going to hit that 2% mark. And the reason for that is because they've been hovering around 3%. And with the news of decreasing rates, people are going to start buying more, because they're going to believe that they can refinance later. And on top of that, you're going to have the summer to compete with. There are things that are very seasonal, like the car market. And the car market should have been very, very hot right now. And I believe that it will be hot to some degree because of tax returns. But it's definitely going to be cooling off late April. And then what do? You have to rely on taxes to sell things. Interest rates to sell things on the market. And so what are we going to be looking to buy? We're going to be looking to buy cars and houses. And in order to do that, you're going to need lower interest rates. And so with German Powell coming out and saying that they expect 3 rate cuts this year, I would expect May to be where the first rate cut takes place. All the tax dollars have ran out in terms of the average consumer tax dollars. And now they are literally relying on their paychecks and, government assistance in the form of in the form of interest rate cuts in order to buy houses, in order to buy cars. And to be honest, we all need the relief. If I'm being serious, as a real estate investor, it's very difficult right now to find anything that makes sense, because the interest rates are just so high. And I don't see any investors coming back with a small 0.25% rate cut, or even a 0.5% rate cut. We finally have people out here telling the truth, like Bigger Pockets, that was lying to people, telling them that you can still buy a home. No one is buying real estate right now, and everyone has stopped buying real estate. And so finally, they're telling the truth that the market is bad, and they're not just blowing smoke up people's behinds, as if we all don't know what's really going on. And so finally, you're starting to hear a sounding argument that, interest rates have literally kept investors out of the market, but it has kept everyone out the market. And anyone really buying right now, I mean, it's either you're buying cash, which would be smart, or you just have a lot of money, or you may not know what you're doing. I mean, those are like the 3 options. It's either you are buying cash, you're very smart, or you have no money and you don't know what you're doing. Those are the only three options. But I think you can say that in any market, can't you? Maybe you can. That's just. I mean, people were trying to buy cash back when there was 3% rates. So I mean, they were trying to beat anybody out of the market, no matter what. So cash is not always something just set for high interest rate environments. No, cash is used all year round, no matter what the rate is, because people are out here to literally swoop from under you and grab what you have. I could have lost this opportunity to own this home just because someone wanted to pay $10,000 less in cash, and so I had to go $10,000 over. And what did that require? Well, that required a loan, and I was able to get that loan at a very, very good rate. So some people need financing, and I needed it at this time, or else I wouldn't have been in this house. So that's just my opinion on that. What do you think? Are you going to get into the market with 3 rate cuts this year? So interest rates are hovering right around 7%. With 3 rate cuts, I can expect it to be right around, let's say, 6.25%. So that means with all the magic lending mumbo jumbo that they do with the interest rates, with a 6.25% rate, if you have good credit, if you have real good credit, you can probably get somewhere in the 5.7 to 5.5% interest rates. And then if you buy some points, you might even be able to get down to 5.25, maybe even 5 flat, or 4.99, if just to have that magic number of 4.99. So from 6 to 5%, you might be able to get an interest rate as low as 4.99. Will it cost you a pretty penny? Oh, absolutely it will. But I think if I had an interest rate of 4.99%, I wouldn't be so eager to sell or to pay it off or to pay it down so quickly. And so I think that that's the magic number. What I would like to see interest rates at is probably about 5.5%, because then I can really work it down. I can work it down to about 4.5, maybe 4.7%. And I think that would be a good number for me. So yeah, I would like to see it at 5.5. Do I believe it'll still get there this year? I would have to say no. I'm even shocked that Federal German Powell believes that they're going to cut interest rates by 3 times this year. I'm shocked to hear that. And it is really shocking news to me. I'm sure that a lot of you are also shocked. And so I can't see interest rates getting to 5% just yet. But 6.7, 6.5, yeah, I can definitely see that happening. And that won't really make a big difference. So I can see why they're going to do that. And that's going to allow the banks to lower their rates a little bit, which will incentivize people to buy a little bit more. So if you like this video, make sure you leave a like, comment, and subscribe to the channel. You know I post every single day at 8 a.m. daily on YouTube and on Rumble. And I can't wait to see you on the next one. Peace.